Chapter 1. The anatomy of a scam. What's the difference between a magician and a scammer? Both rely on illusion, but only one is out to steal your money. At its core, every scam is an act of deception, a con designed to separate you from something valuable, whether it's your money, personal information, or trust. Scams can be small, like a fake charity asking for £20, or massive, like Ponzi schemes that steal billions. What is a scam? A scam is any dishonest scheme to deceive someone for personal gain. What makes scams so effective is their ability to exploit basic human emotions like trust, fear or greed. Whether it's a message promising free money or a call from someone claiming to be a bank, scams are designed to catch you off guard. The anatomy of a scam. Every scam follows a pattern, often referred to as the hook, the play and the sting. 1. The hook. Scammers first grab your attention. This could be a shocking email, subject line, a too good to be true deal, or an urgent phone call claiming you owe taxes. The hook is designed to make you react emotionally, not rationally. 2. The play. Once they have your attention, scammers manipulate you to gain your trust. They might pose as an authority figure, like a bank manager or police officer, or someone you care about, a relative in need. The play builds credibility and makes their story believable. 3. The sting. This is where the scammer takes what they want, whether it's your money, personal information, or access to sensitive accounts. By the time you realise what's happened, it's often too late. Why do scams work? Scams succeed because they tap into universal emotions and situations. Fear. Threats like, your account will be closed if you don't act now, create panic. Greed. Promises of easy money, like lottery winnings, appeal to the desire for wealth. Trust. Posing as trusted organisations like your bank or government, scammers exploit our willingness to believe in authority. Love. Romance scams prey on those seeking connection, often dragging victims into long-term deception. Scams as a global industry. Scams are not isolated crimes. They're part of a multi-billion-pound global industry operated by networks of professional fraudsters. Advances in technology such as email automation and artificial intelligence have made it easier than ever for scammers to target thousands of people at once. The ripple effect scams don't just affect individuals. They harm families, disrupt businesses and damage trust in institutions. Victims often feel embarrassed or ashamed, which can prevent them from reporting the crime. This silence allows scammers to continue their operations unchecked. Understanding the anatomy of a scam is the first step in protecting yourself. In the next chapter, we'll dive into one of the most common forms of fraud. Credit card scams, how they work, why they're so pervasive and what you can do to avoid becoming a victim. Chapter 2. Credit card scams. Last year Jane thought she was being careful. She used a well-lit cash machine at a local supermarket, just as she had done dozens of times before. But within 24 hours her bank account was drained. The culprit? A tiny device installed on the card reader that copied her credit card details without her knowledge. Jane became one of millions of victims of credit card fraud, a crime that costs the world billions every year. Credit cards are a scammer's dream. With just a few stolen numbers, they can shop online, transfer money, or even sell the information to other criminals. And while banks work hard to detect and prevent fraud, scammers are always one step ahead, using technology and human psychology to exploit their victims. Types of credit card scams. 1. Card skimming and shimming. One of the most common physical methods scammers use is card skimming, where tiny devices are placed over or inside card readers to steal data. More advanced criminals use shimming, microchips inserted into machines to target chip-enabled cards as well. Shimming is much harder to detect as most of the device is hidden in the slot of the ATM. A skimmer is also a handheld device which is a similar size to a packet of cigarettes, which can be used by a waiter or shop assistant to swipe your card through to steal your data and enable criminals to clone your card. Real life. Example: the Lebanese loop is a type of ATM fraud where scammers use a device to trap a victim's bank card in the machine, making it appear as though the card has been retained by the ATM. While the victim is distracted, the scammer often observes their PIN and retrieves the trapped card once the victim leaves. How it works. The setup: scammers insert a thin strip of metal or plastic, the loop, into the ATM's card slot. The loop is designed with a small flap or hook to catch the card when it's inserted. The trap: when the victim inserts their card, it gets stuck inside the ATM because of the loop. The ATM will function as if the card is retained but won't actually eject it. Distraction: the scammer may pose as a helpful bystander, suggesting the victim re-enter their PIN to retrieve the card. During this process, they memorise the victim's PIN. The theft: once the victim gives up and leaves, assuming the machine has retained their card, the scammer retrieves the trapped card from the loop and uses the stolen PIN to withdraw your money. Signs of a Lebanese loop card stuck in the ATM. If your card doesn't eject but the ATM seems otherwise functional, it may be a sign of tampering. Unusual advice from strangers. Scammers often pose as good Samaritans and encourage victims to re-enter their PIN, claiming it will release the card. Tampered card slot: look for signs of damage, glue, or anything unusual in the card slot. How to protect yourself: inspect the ATM, check the card slot for unusual attachments or damage before using it. Cover your PIN. Always shield the keypad when entering your PIN to prevent anyone from observing it. Stay at the ATM. If your card gets stuck, stay by the machine and call your bank immediately. Do not leave until your card is recovered or securely blocked. Avoid accepting help from strangers. Politely decline assistance from bystanders, as they may be scammers. Use trusted ATMs. Stick to ATMs in well-lit, secure areas, such as inside bank branches. Exploiting magnetic stripes. In countries or stores that still rely on swipe-based systems, scammers clone stolen magnetic stripe data onto blank cards. These cards are then used for purchases, often in regions where chip and PIN systems are not mandatory. Synthetic identity fraud. In this sophisticated scam, fraudsters combine stolen data from multiple sources, e.g. names, dates of birth and account numbers to create fake identities. These identities are used to open credit card accounts, apply for loans, or commit other forms of financial fraud. The bigger picture: credit card fraud is a constantly evolving threat. Scammers are highly adaptable, using new technologies and techniques to exploit vulnerabilities. The illusion of safety, whether through physical cards or digital wallets, can leave consumers and businesses exposed. May understanding these risks is the first step to staying ahead of fraud. In Chapter 3, we look at phishing and impersonation scams. Chapter 3, Phishing and impersonation scams. Every day, millions of people receive messages that look legitimate: a warning from their bank, an update from a delivery service, or even a plea for help from a loved one. Behind these seemingly normal communications, scammers lurk, using phishing and impersonation tactics to steal sensitive information, money and trust. What is phishing? Phishing is a type of cybercrime where scammers impersonate trusted organisations or individuals to steal personal information. This can include login credentials, credit card numbers, or even access to entire systems. Key elements of phishing: urgency. Scammers pressure victims to act quickly to avoid a negative consequence, e.g., your account has been locked. Impersonation. They mimic logos, email addresses, and even phone numbers of legitimate entities. Emotional manipulation, creating fear, trust, or curiosity to bypass logical thinking. Types of phishing. Scams 1. Email. Phishing. Scammers send mass emails pretending to be from banks, retailers, or government agencies. These emails typically contain a link to a fake website designed to capture login credentials or payment information. 2. Spear phishing. Targeted attacks on specific individuals or companies, often using personal details to appear legitimate. 3. Smishing, SMS phishing. Fake text messages often impersonate delivery services, banks or other institutions. 4. Vishing, voice phishing. Scammers call victims, often posing as customer service representatives or government officials. 5. Clone. Phishing. Scammers clone legitimate emails but replace links with malicious ones. How phishing works. Spoofing technology. Scammers use tools to fake email addresses, phone numbers and websites. Fake websites. These often mimic the design of legitimate platforms, complete with logos, fonts and layouts. The play. Scammers convince victims to provide sensitive information through fear, trust or urgency. The sting. The stolen data is used to access accounts, make purchases or sell on the darknet. Impersonation scams. Impersonation scams often overlap with phishing but are more direct. Scammers pretend to be someone you trust, such as 1. Tech support scams. Callers claim your computer is infected and ask for remote access. 2. Government impersonation. Scammers pretend to be tax officials, immigration officers or police demanding immediate payment. 3. Romance scams. Fraudsters build emotional connections over time, eventually requesting money for fabricated emergencies. 4. Business email compromise, BEC. Scammers impersonate CEOs or executives to defraud companies of large sums. Case study. The Google Docs phishing attack. In 2017, millions of users received emails inviting them to collaborate on a Google Doc. The link redirected to a fake login page where users entered their credentials. Within hours, hackers gained access to Gmail accounts worldwide, exploiting sensitive data on a massive scale. How to protect yourself. 1. Verify the source. Don't click on links in emails or texts without verifying their legitimacy. 2. Look for red flags, poor grammar or misspellings in emails, requests for personal information that seem unusual. 3. Enable two-factor authentication. 2FA. Protect your accounts with an extra layer of security. 4. Educate yourself. Stay updated on the latest scams and teach family or employees to recognise phishing attempts. 5. Use anti-phishing software. Many email providers and browsers now have built-in tools to detect and block phishing attempts. Conclusion. Phishing and impersonation scams prey on human emotions, from fear and urgency to trust and love. By understanding how these scams work and staying vigilant, you can protect yourself from becoming a victim. But phishing is just one piece of the puzzle. In the next chapter, we'll explore online shopping and marketplace scams, where fake products and fraudulent sellers are waiting to exploit unsuspecting buyers. The trap was set. Emma didn't think twice when she received the email. It had all the hallmarks of legitimacy. The logo of her bank was at the top. The tone was professional and the subject line grabbed her attention immediately. Unusual activity detected on your account. Please verify immediately to avoid suspension. It was the third time this year she'd received such an alert. With a toddler tugging at her leg and groceries piled on the counter, Emma clicked the link without hesitation. It led to a page identical to her bank's login site. She entered her username and password. Half an hour later, her phone buzzed with a notification. £2,500 had been transferred from her account to an unfamiliar name. Panic set in. She called her bank, but the damage was already done. The account was drained and the transfer was untraceable. She had just fallen victim to a phishing scam orchestrated by an international network of cybercriminals. In Chapter 4, we cover online shop scams.